With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then ChannelChek truly is the orchard. The listed companies support ChannelChek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for ChannelChek so you're always up to date on what's going on at the small and microcap data place. Welcome to the virtual Roadshow series presented by ChannelChek. This roadshow features Justin Dye, CEO, and Nancy Huber, CFO of Schwazze, OTC ticker symbol SHWZ. Following a formal presentation, they are joined by Joe Gomes, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed, SEC-registered broker-dealer, for a Q&A session featuring questions that were submitted by the live audience. You can find Noble's research on Schwazze on channelchek.com or by clicking the link in the description. With that, I am pleased to present Justin and Nancy.
Thanks for joining us today. I'm Justin Dye, Chairman and CEO of Schwazze, and with me is Nancy Huber, our CFO. So we're excited to share with you a little bit about the company and where we're headed. Our strategic vision. So we really want to become the leading vertically integrated business here in Colorado and in those markets where we serve customers. So to be number one is important to us. We have a clear acquisition and growth strategy, both organic, so new stores, new products, new capabilities, and new capacity, as well as our inorganic strategy of M&A and continue to partner with really great companies. We're very focused on high quality products and making sure they're consciously sourced and doing the right things around packaging and being environmentally conscious in how we think about things that we're offering in our stores as well as through our supply chain. And it's a great platform and the ability to do some good for our community and our outreach program in those communities where we serve and to do some really nice things for our communities and stakeholders there. Our value proposition, we want to become a very strong regional operator in the Southwest. We're a fast growing single state operator. We have 19 dispensaries today, and we've done 7 acquisitions in the last 12 months. And our goal is to have a house of brands, really high quality brands, both at retail as well as product and on our wholesale side. And we think we get there by having a really great leadership team and having a team that works well together, know what the blueprint is for execution. And of course, that plays out through our operational playbook at retail, through our supply chain, which is manufacturing, distribution, all the way through to cultivation. We've been very busy. So from a catalyst perspective, we've been aggressive with acquisitions. We've also announced our own biosciences division that we did back in a little bit earlier. And then we've continued to make announcements and do acquisitions as we've gone forward. And we're excited about the pipeline going forward as well. So we have a very solid M&A pipeline, and I believe there'll be more announcements on its way. We're really excited about where we're headed. Our team is really built on individuals who bring both cannabis expertise as well as Fortune 500 and larger organization capabilities. So myself with Nancy's done a great job bringing a lot of discipline on the financial side and the accounting side. And she's been a CFO for public companies in the tech sectors and CPG. Todd Williams comes to us from Albertsons, where he was integral in running M&A and corporate development and growing that business to where it is today, which is north of a $60 billion business. Nirup Krishnamurthy brings really great operational discipline and is an energetic leader and has spent a lot of time in supply chain and retail in his past experience. Then Dan Pabon is our general counsel and runs government affairs. And Dan was important in architecting and writing the rules around medical marijuana as well as recreational marijuana here in the state, and put those rules into effect. And he's consulted all over the country around best practices there. So we're lucky to have Dan with us. So Schwazze at a glance. So we're headquartered in Denver. We have 19 retail locations. We have a large cultivation and growing cultivation capability. We have 7,000 square feet of manufacturing. If you look at the midpoint of our range, of our guidance range, $118 million of revenue with $33 million of EBITDA. And we're about a 305 million market cap today, trading at approximately 10 times multiple, which is at a discount to where other large providers or other large MSOs and single state operators are trading today. So we think we're a good value versus our competitive set. And here, this really speaks to that. It speaks to the fact that we are at about a 10 times multiple, and you can see a number of the other larger regional and top 5 MSOs are trading well north of that. Sector tailwinds. The cannabis sector is really built for hyper growth. We have 17 states that have approved recreational. 45% of the U.S. population is living in recreational legal states. And if you look at incidence rates or usage, annually 18% of the population, monthly 11%. And we believe this is a growing sector and continues to grow and getting really nice advancements in new states coming online. So we're excited about the growing part of this business. Investor snapshot. So just a couple things to take away here. You can see where our share count is, and we're roughly at $300 million enterprise value. Last quarter, we announced $10 million of adjusted EBITDA, generating free cash flow. We had $21 million worth of cash on the balance sheet at the end of the quarter, and long-term debt, including seller notes, about $54 million. We do have 2 analysts covering us today, Joe Gomes at Noble Capital, who we're with today, and then also John DeCourcy at Viridian Capital Advisors. And we hope to continue to build out that roster of analyst coverage as we continue to generate interest in our company as we execute. I want to have Nancy cover Q2 performance here. Nancy?
Thanks, Justin. So in Q2, we had $30.7 million of revenue. About 70% of that came from retail and 30% wholesale. So our wholesale business is a combination of manufacturing and also some or ancillary product companies. We have 2. One is a nutrient company and one is a hydroponics supply company. And then our retail group performed and supplied $21.5 million of that revenue. Cost of goods is right around the 50% level, and our EBITDA margin is 33% at $10 million of EBITDA adjusted EBITDA in Q2. Retail stats for the quarter, actually this is for the first half year. You can see retail was up sales-wise 38% in Q1 and 16% in Q2. Customer visits have also continued an upward trend, as has basket size. So we are measuring things that are very close to retail's normal measurements, something that we don't see a lot of our competitors doing. Colorado sales were up 8% year over year, and Schwazze was up 16%. So we continue to outperform the Colorado market by about 8%. Now, Q3, the cycle is, there was a lot higher last year over year numbers. So you'll probably see these numbers come down a little bit over what they were for Q1 and Q2, but we are still outperforming the Colorado market.
So if you look at our strategy to become a house of brands and having really good retail brands as well as product brands, both on the wholesale side and the retail side. So StarBuds is our retail banner of choice here in Colorado. We stand for great assortment, we stand for great service, and you should be able to find up to 70 strains of flower within our stores. And Purple Bees is our growing manufacturing distillate business. And we continue to grow that, and we believe we're the #1 provider of distillate in the state. Success Nutrients, that's our nutrient line that we sell to really high-end quality growers throughout the country, and that's been a part of our formula for some time. And then we also own the 3 Alight methodology, which is a set of SOPs on how to do indoor growing that we continue to use in our own, as well as provide through the Success Nutrient line. And Big Tomatoes, our hydroponic stores, it's one of the original providers here in the state, and continues to grow as well. Our vertical platform, where we start with retail, we also have manufacturing and supply chain that feeds retail. We have just recently acquired a 34-acre farm in the southern part of the state that will continue to grow and provide flower to our stores, the wholesale market, as well as provide biomass that will come in through our Purple Bees distillate manufacturing business. And then we've also launched a biosciences business to do cannabinoid research, as well as do more innovative product development there that can find its ways to our wholesale customers as well as to our retail, and do a lot of work on terpenes as well. So trying to really anticipate where the customer is going versus where they are today. Our acquisition success, you can see first one, the case studies, Purple Bees. We've grown Purple Bees 196% since the acquisition. And that's our manufacturing distillate business. If you look at the 4 Mesa Organic stores, 13.9% increase there as well, and expanding margins. And then if you look at StarBuds, we've increased the gross margins there by 4% since we've been able to merge with them using best practices from both teams and having a synergy optimization office to drive that. So our ability to make these businesses better with size and scale continues, and we're excited about future acquisitions as well, and being able to execute against our targets. So if you look at the outlook, why we're so excited about the opportunity. Colorado is a great state. It's probably going to do about $2.5 billion in 2021 is our expected. So it's the second largest cannabis market in the country. And you can see the green, which is where you've got recreational adult use, blue is medical, and you continue to see the U.S. starting to shade blue and green. And we think we'll see that continue over time for operators such as us to be able to take advantage of that, particularly in the Southwest, where we continue to look at becoming a regional operator after Colorado. But I don't want to miss this point. We will not take our eye off of Colorado. It's our home territory. We want to become #1 here with good market share and our ability to offer cost-effective cannabis products to our consumers, as well as be able to provide distillate and other products to our wholesale customers as well. Our outlook. So when you look at U.S. total cannabis spending, I think this is pretty interesting. So we're approximately $20 billion today. That's going to be growing to 89 to 100 billion, depending on which report you're looking at. And just to put that into context, that it's larger than coffee. It's approaching tobacco and beer. This is a large growing category with good margins. And these are the last days of prohibition for this market. That's why we're so excited to bring modern techniques, bring our blueprint of operating skills to that, continue to innovate in a growing category and partnering with great brands and products as the consumer continues to really vote with their dollars and the category sees more and more incidence rates. Our outlook. So if you look at Colorado, really the punchline here is you look at it, we have good representation. Our stores in the Denver metro area. We certainly have a lot of room to grow to the west, as well as to the north and the northeast. We do have 6 stores in the southeast, Pueblo, Ordway, Los Animas, Rocky Ford. And we believe there's more and more opportunities for us to continue to grow the number of stores and our product growth rate as well. So total dispensary count in the states, 800. There's 570 licenses, rec licenses, 440 medical licenses, and 474 cultivation licenses. So the takeaway is highly fragmented, and it's a growing state. And we believe we're positioned uniquely to be able to continue to consolidate retail cultivations and products here, make them better, continue to drive outstanding margins, and continue to grow the business and take care of the customer. And we think if we can do it here, well, that positions us very well for the next state or two to be able to take this operating playbook and apply it there as well, and be very disciplined with how we operate the business and how we grow the business. So strategy here, if you look at sort of the flower categories, et cetera, you can see flower is by far the largest category, and we approach that by having really great assortment in our stores, and we have opportunities to continue to develop our own strains as well as partner with leaders here in the state. And flower is still going to continue to be a big part of the business as far as we see things today. Dabbable concentrates continue to grow, vapes growing, edibles growing. We think health and wellness is certainly going to be a category down the road that's going to continue to grow and mature. It's a little smaller today, but we're going to continue to see that. And then on the retail dispensary licenses, you can see we're 3% of the total licenses here in the state, so that gives us great opportunity to grow. You can see it's highly fragmented. The top 10 players control that 22%, and a lot of independents in the state as well. So that is all right for growth and the ability for some of these independent owner and operators to be able to get a liquidity event by selling their business to a company like ours, as well as being able to participate to the extent that we use our stock as a currency to participate in the upside of the growth of the company and the industry. So we think we've got a great value proposition, and we've got a good track record with those companies that we've partnered with so far, and I think that's going to be an opportunity for us in the future as we continue to grow. The investment. So the takeaway is cannabis is a great space. I can't think of a better sector to be in over the next decade. We're positioned to be differentiated and to win in Colorado, and we believe that's going to translate into the next state or two as we go forward. We've got a very solid leadership team that blends cannabis as well as Fortune 500 scaling experience, as well as M&A savvy and transaction capabilities to be able to generate good returns from deals. As we said, we're one of the fastest growing single state operators, and we're building a house of brands, both at retail, wholesale, as well as products that we will provide through our retail stores. And the key to all of this is being able to be really consistent and have great operations at retail, have consistency there, as well as going back through our supply chain and having SOPs, using data to continue to drive efficiencies there that we can provide highest value products at the lowest cost for the ultimate consumer is where we're headed. And lastly, we just see there's a lot of opportunity for unlocking the potential of a cannabis plant. I think it certainly has medical benefits to it for a number of different ailments, as well as providing people with an alternative to alcohol, and in terms of pain management to the opioid crisis. So we see a lot of goodness with the growing category. Cannabis can offer a lot We all are touched by different stories, whether it be a family member of ours who had cancer, that where cannabis has helped make a difference with easing pain and suffering, whether it be anxiety or sleep management. We see a lot of benefit here, so we're excited about supporting cannabis in the sector. We've got a great state here in Colorado that continues to grow, and we hope to be a leader here. So with that, I think we'll take some questions now.
Thank you, Justin and Nancy, for that informative presentation. I'm Joe Gomes, the Noble Capital Senior Analyst who covers Schwazze. Here are the questions I've selected from the audiences, as well as a few of my own. So let's start out here. What makes Schwazze stand out, in your opinion, from the other companies that are vying for attention in the space?
Yeah, a couple of things. So let's start with the market. So start outside in. Colorado is a great state. It's highly fragmented. We've built this company to be able to not only grow organically, but also to grow inorganically through M&A and buying licenses and applying for new licenses. So we think we're uniquely qualified to be able to continue to consolidate Colorado. And it's a great state. We have a great leadership team that's been there, done it, knows how to deliver results. I think this team did a great job during the pandemic of managing the business through that, and not only growing the business, but having the business really thrive. And it comes down to operating excellence. We think if we have seen the benefits of our playbook with these acquisitions, and we think we can do that with the next set of acquisitions as well, as we drive synergies and make this one of the leading growing businesses in the Southwest.
Great. Now, Schwazze has 19 dispensaries. You mentioned it's about 3% of the overall dispensary locations. And, it says that the top 10 control about 22%. How has that been fluctuating, say over the past couple of years? You've mentioned somewhat of the roll-up strategy. How much of the market do you think you can get to in terms of in dispensaries or control of the Colorado market?
Well, we think there's certainly an opportunity to have north of 100 stores here in the state. We think we certainly can continue to grow share. I don't know what that share ends up being over time, but as long as we're providing really good retail solutions as well as great products to consumers, we think we're going to win here. Now, if you remember back in 2019, the advent of House Bill 1090 came into play that allowed outside owners, investors to own plant-touching operations here in the state. That's why it's so fragmented, and that's really why it's great from a timing perspective. This is a great time to be in Colorado because it still is fragmented. It's a large market. We're continuing to see growth. There's a lot of profitable operators here. And, you need a unique position here to be able to pull that together across different geographies and different cities here and have a really good ground game. So we expect we could build a $400 or $500 million business here in the state, and that's our goal.
That's great. And what percent of the Colorado market is retail cannabis still not approved? And similarly, what percent of the market is estimated to still be illicit that could over time move into the approved market, legal market?
Yeah, I think we still have some growth there. I mean, we would target the black market is somewhere in the single digits range on a percentage basis. The MEP does a great job of patrolling that and with enforcement actions. And there's still a number of large geographies where, particularly on the rec side, you don't have the opportunity to have a dispensary today. So if you look at Colorado Springs, it's only a medical market. I think over time that will become a recreational market, but you still have a number of suburbs. You've got Broomfield, just as one example here in the Denver metro area that doesn't have any dispensaries. So there's still a lot of growth. There's growth in the western part of the state. If you look at Grand Junction and some of those places, So there's still a number of large cities where there's greenfield to go after, and that'll be future growth for us.
Excellent. Any plans on the medical cannabis side?
We certainly have some interest in a few medical dispensaries, but most of our business is really guided towards the recreational side, and rec allows you to treat medical as well as the adult use market. You sort of get that's how we kind of approach it. So, but there are some medical folks, some targets out there that we are looking at.
And you've mentioned, I mean, there's just been you've had a few fantastic quarters this year in your earnings and revenues. Are you expecting this trend to continue? And if so, is 250 million still the pro forma revenue estimate for 2022?
So I'm going to let Nancy. I'm going to start, and I'll let Nancy answer the more detailed question there. But we feel really good about where the company's growing. We continue to see good success going forward. The operations are performing well. We've got really good operating momentum, and in terms of growth, we still are very excited about our growth potentials and continue to grow the company at a quick clip. So Nancy, I'll let Nancy answer the more specific one around guidance and 2022.
Thanks. So we haven't really provided guidance. I think what we said was that it was our target to have acquired companies such that our 2022 pro forma would be 250. That's still our target, so that by the end of Q1, we would have acquired enough companies that would give us that kind of pro forma for 2022.
Okay, great on that. Now, let's talk a little bit. You've made some acquisitions here over this past year. You've acquired a lot of cultivation assets, and with those, what percent of product can you provide in-house, and how does that impact margins for the company?
Yeah, great question, Joe. So, if you look at our last quarter, we had 33% EBITDA margins, and that's with a de minimis amount of product going through our stores on the flower side, as well as our own edible products, et cetera. So we see great potential there. So we see margin appreciation by being able to provide products and as well as our own flower going forward. You're probably you could be picking up 10 to 15 points of margin in terms of the category. Now, how much of that you use to promote and to drive sales and reward customers for loyalty, et cetera, that's sort of the mix there. But certainly we have a lot of potential to continue to drive margins and have promotional funds to be able to go drive sales as well.
Okay, and one of the other items that you've been moving into here is home delivery. I know you've gotten home delivery for one location. Maybe you could provide us a little more detail on how that is starting to expand, how you plan on attacking, so to speak, the home delivery model, and what you think that can mean, for the company.
Yeah, we're really excited about it. So we're testing and measuring, which I think most people in the industry probably are, particularly here in Colorado, which is this state has a regulatory framework where you have to ship out of a brick and mortar store. That's the way it works here. So you have to figure out the last mile to get that to the consumer. And really what we're focused on is providing the consumer products at a value that works for them, really how they want to be served. So if they want to come into the store and shop and explore, they can do that. If they want to order in advance, pick up at the store, they can do that through curbside pickup. If they want next day delivery or same day delivery within windows, we'll be able to provide that to them. So, and really what we're seeing is the basket size is growing quite a bit for those delivery orders. So you're seeing a much larger basket than what you see at the retail. So that shows great promise. And then, we're testing and measuring the last mile to get it to the consumer as efficiently as possible. And I think we're going to continue to test and measure and see what's see what's working and making sure we're managing margins and the customer experience for that matter.
Okay. Thank you for that insight. And you mentioned it a little bit here in your presentation, and we've talked about, you've done some acquisitions over the past 18 months. The overall Colorado M&A activity has been quite active recently. Any thoughts as to why now and why Colorado?
It's a great state. I think Colorado has been overlooked from a interest standpoint because it's not per se a limited market state. But however, there's limited opportunities within different jurisdictions and different cities. So I think it takes people to sort of understand that. And I think there's been a land grab. I mean, if you look at investors as well as MSOs, they've been focused on limited license states in the East, which allows, certainly facilitates great growth. But how many stores can you have? How big of a business can you build there if you can only have 3 stores? I think some of those limitations are playing into that, driving folks to more mature markets. And certainly we think Colorado's one of the best markets in the country.
I have to agree with you there, Justin. So how do you think your grocery store background assists you in the cannabis marketplace, maybe especially vis-a-vis some of the competitors that are out there?
We've got it really starts with our team here. We've got a good leadership team. We've got good people in our stores that know how to manage customer experience, et cetera. And, we want to, it starts with merchandising. What's the right products, right positioning for those products, pricing, promotion, and goes through to store management, making sure that we're providing legendary service and making each consumer feel special coming in the store and always having something exciting, some new stores or new products in the store, new flower drops, et cetera. So creating some excitement around that. I think I leverage my training and people I've been fortunate working with in the grocery business over time and learning that. And we've got a number of really good operators here within the business who have operated that. I think the other 2 components are capital management, being a really good steward of capital. It is, knowing how much to spend and what you need to spend it on, things that the customer feels and makes a difference instead of, spending a lot of money on physical assets that the customer doesn't really enjoy. So I think being really disciplined around that. And then I think having tremendous expense management and understanding, hundreds of basis points of cost and how you manage that. In our old world, we made 4 to 5% EBITDA margins, and you had to watch every cost in the P&L. And being able to budget that. Nancy's done a great job of installing discipline here around budgeting and controlling our costs, and we're going to continue to do that.
Great. And kind of a 2-part question here, and you touched a little bit about it in your previous answer. Does the company plan on becoming an MSO anytime soon? And what is the need for capital, if any?
Yeah, two answers here. So one is we are focused on Colorado. And if and when we decide to go to the next state, that state will be one where we believe we can develop a number 1 position in that state. And we're going to start with retail and brands. So we've not announced that we're going anywhere else, but the plan would certainly be to add another state or 2 in the near to long term and build number 1 positions there. The second part is we do have a number of acquisitions in the pipeline that require, we typically structure deals with stock, cash, and some type of seller note in general. So there certainly is a cash component to that. At the end of last quarter, we had $21 million of cash on the balance sheet. So we'll be able to use some of that cash on the balance sheet for deals, as well as, we may be looking at future fundraising as well to go fund these deals. And by the way, we're really disciplined with how we buy these businesses and partnering with really solid companies to bring them into our platform. So we're going to stay disciplined buying as a multiple of EBITDA and really trying to garner as many synergies as we can with those teams that are coming on board. And hopefully it's a win-win. They get to win with our stock. They get to take some liquidity in these deals and get some cash. And then we can grow together and create value together. And it's pretty exciting. Nancy, do you have any other comments on that?
Nope, I think that's exactly the story.
Okay, and again, another question that you've touched on briefly, but we'll throw it out there. The company trades at a pretty low multiple compared to others in the industry. Why do you think that is? And, how do you think you can lower that delta between Schwazze and some of the peers out there?
I think three things. I think one is telling our story. So we're trying to do more of these things where the first phase of us taking over and running the business was let's get deals done. Let's operate the business. Let's really make sure we're fine-tuned on the operational side, which we continue to work at. So that was sort of phase one. We're also going to continue to grow. And I think with size and scale, that's going to lead to probably better, obviously more EBITDA, as well as probably a better multiple. And then I think you're going to have some regulatory things down the road as well that's going to pop, that's going to create more, catalyst for growth as well. So I think we're really well positioned. This business is solid. We're very profitable. We generate free cash flow. We're growing our market share organically here in Colorado. We've got a robust growth pipeline and the team's executing. I think we do all those things over time. Our shareholders will be rewarded.
So you kind of answered most of the next question, but we'll throw it over to you. What is your vision for the company, and is there an ideal exit strategy?
Our job, Nancy and I talked about this. We're not focused on an exit. We're going to build a great company here. We will launch innovative products. We're going to have great experiences at retail. We're going to continue to grow those aspects of the business. We're going to continue to take cost out of the supply chain and make sure we're very efficient. And we think we do all those things, that creates a lot of opportunities for us to partner with other people. Could be things down the road, or when we get some regulation changes and descheduling, et cetera, we could certainly do an uplift to the NASDAQ or New York Stock Exchange. And we're going to do what's right for the shareholder, and what's right for the shareholder is build a really strong company that's really valuable, and that'll present opportunities for us.
That's great. Well, Justin and Nancy, that's all the time we have for today. Thank you for helping us get a better understanding of the Schwazze story. If you would like to get the independent research I've written on Schwazze, go to channelchek.com and type in the company name or the ticker SHWZ in the search box in the top left company data section of the site.
Thank you for joining us for this virtual roadshow presentation brought to you by ChannelChek. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and 6,000 other small and microcap companies.